Hey, good evening, everyone. Hope you are having a blessed day. This is Lonnie with 5 Minute Trades. If this is your first time checking out our YouTube channel, please make sure you like, share, and subscribe. I know it's been a minute since I made a video. Been busy with life and helping people pass various prop firm funding challenges accounts like FTMO, for example. Just helped a client pass their challenge account Friday, actually. So they passed their phase two. Now they were going to begin a live $50,000 trading account, and very, very happy for them. Wish them all the best. I'm glad that I was able to help. So without further ado, let's get started with this video. So as you can see on my screen, I'm looking at gold, right, on a 4-hour time frame. So I have been trading a lot of gold recently, because I really like trading gold because it moves very swiftly, and you can get awesome, great risk to reward ratios by trading gold because how swiftly it moves. So let's zoom out a little bit, try and get a bigger picture here what's going on with gold. So we can see here, we zoom out, we see that gold has been trending down for quite a while, for a couple months at least. We see this big push right here, this big bullish move right to the upside. But notice that it didn't close above this. It didn't make a higher high. And also notice that I'm not using any indicators to analyze this trade. And you don't need any indicators to trade successfully. All you have to do is understand market structure and a few other key things. So we have this area of supply here, which I have highlighted here. So you see prices coming towards this area right here, our supply zone. And you see the little line right here having an alert. Now this an alert is literally just an alert. It's not a pending order. So I don't have a pending order on this trade. And of course, this is not a signal. This is all for educational purposes. If you do trade, please make sure you understand how to properly predefine your risk. I always recommend my students and members that you never risk more than 2% on any given trade, or on a funded account, never risk any more between 0.25, 0.5%. All right, so ideally what I want to see is I want to see price touch this zone here, and then I want to zoom down to a smaller time frame to get a better entry, or look for extra confirmations to get into the trade. Now my bias on this is short, at least for the short term. The reason why I am biased to the downside is for a couple reasons. One, how we saw the overall market structure is bearish for gold. Two, we have this imbalance here that's being created. Now, imbalance, what I like to refer to as IPA, is improper price action. The market loves to fill in these areas of imbalance. So what we can see is, if we can see market come into this zone here, move around a little bit, and then drop down to take out the equal lows right here. So we do have the equal lows, and the market loves to target those areas. Let me just kind of highlight that. We do got the equal lows here. And as I just mentioned, the market does love to target the areas here. So my plan for this trade is, as I just mentioned, wait for it to come into this zone here, then go down to a smaller time frame and look for a proper entry. But let's just assume for a moment that we're going to get in at this level, which I don't recommend for the aforementioned reasons. But let's just look at our potential risk to reward ratio. Say we get in about right here, and say we have our stop loss just a little bit above the high of our supply zone. If we were to get in at this level here and ride it down, we could easily have a 1 to 5, almost a 5 to 5 and a third risk reward ratio. So what that means is, let's just do 1 to 5 simple math. You risk 1%, you gain 5% on this trade. If you risk 2%, you gain 10% on this trade. So see, like for example, you was doing like an FTMO challenge where you have to gain 10% within the first 30 days on phase one. You risk 2% on this trade, and it comes here. You tackle the challenge off of one single trade. Now look how what I like to do is estimate time, how long it could possibly take to get to your target if it was to go in your direction. Look at the last time it was at this level here. So it was here, back in September, came back down here October. So it took a minute, but there wasn't that much as imbalance here as being created here. You can see that we have a greater amount of imbalance here. So it could trigger here, and then it could just drop. So that's another reason why I would look for a more refined entry, because I can get even possible one instead of 1 to 5 or 1 to 10 risk reward ratio. So that's kind of my synopsis on my thought process on gold right now. As I mentioned, this is not a trade signal. Just sharing this for educational purposes. Make sure you always do your due diligence. Make sure you understand proper risk management when it comes to trading. You can lose a lot of money when it comes to gold if you don't know how to predefine your risk. If you don't know how to predefine your risk, search on my YouTube channel. I have a video that actually teaches you how to predefine your risk before you get in any trade. But one quick thing that you could do to help you understand how to predefine your risk regarding gold also is that you see right here. Let me change the style for this style. Take off compact mode. So here, let me lock this on, move it. You see how it says quantity is 64, right? So on FTMO, for example, when it comes to indices and metals, you got to go by the contract size. So for example, on FTMO, at the time of this video, the contract size for gold is 100. So what that means is, say for example, you trade a $50,000 account. That's what this risk reward ratio is based off of, a 50,000 account at 2% risk. If you trade a $50,000 account, say you was doing the FTMO challenge, and it says quantity 64, that does not mean 64 lots. Remember, I mentioned the contract size is 100, so you have to take that 64 and divide it by 100. So basically, to not risk more than 2% on this trade, you have to trade no more than 0.64. Because you take 64 divided by 100, you get 0.64. So that's one quick way you can use TradingView, the short and long positions, to help you figure out how to, mitigate your risk and how to predefine your risk. Now, this tool is very, very accurate when it comes to metals and indices, but keep in mind you got to know the contract size based on the various brokers that you use. Some brokers are different. Some brokers have a lower contract size. Some brokers have a higher contract size, and some assets have a different contract size. For example, this gold generally has a contract size of 100, but silver has a contract size of 5,000. So you had to take the quantity that TradingView says that you can trade and divide that by 5,000. So of course that's going to be a smaller lot size. So keep all that in mind. If you have any questions, you want to know more about how to pass the FTMO challenge account or any funding challenge account, please feel free to respond in the comments on YouTube, on our YouTube channel, or you can message me directly via email at Lonnie, Lonnie, at 5minutetrades.com, and I will be happy to respond to any questions you may have. Once again, this is Lonnie Williams with 5minutetrades.com. Hope you have a blessed and wonderful day. Take care, and God bless.